Yo, what's good, guys? What is happening? Well, you can tell what's happening. But quite frankly, ladies and gentlemen, over the past few days, it's not anything that you haven't been warned about. The move itself was fishy. I didn't like it. I said it. Be careful. The number one question that you have to ask yourself is, what does the market maker want the retail trader to think? Now, if you're new to the channel passing through, welcome to Traders Reality. I am your host, Tino. And in this channel, my goal is to try and help you understand how the market works. Now, this is a game of probabilities, ladies and gentlemen. There's only one of two things that price can do. It can go up or down. So, in essence, the odds are kind of in our favor. It's not like the game of roulette, where you pick one number and there's a 35-1 chance of it actually hitting. Odds aren't really well there, are they? But when you come to the game of trading, you either pick the right direction, and the goal for every new trader is to get out of the wrong direction as soon as possible at minimal cost. That's the thing about trading. It's all probabilities, but you can improve the chances of a trade playing out if you understand the story of how they move price. Remember, you can only buy when someone sells. You can only sell when someone buys. The game of trading itself, especially in unregulated crypto markets, is liquidity providers. These are the market makers, the guys who enable you to buy and sell. You may have heard me many a times in streams before explaining to you how and what happens when you come to the market. Pretty simple explanation. You as the retail trader, right here. Here is your broker or exchange. Let's call it Binance. And here's the market maker again. Now, some of you that have been members of the channel for quite some time, all right, you may have heard this, but guess what? It's never a problem to understand it, so it gets ingrained in your mind over and over again. Why? Because sometimes we get lost in our trading, ladies and gentlemen, and we tend to forget about the most important thing that is happening in price, okay, is the relationship between what retail trader thinks against what the market maker is really trying to do. So as the retail trader right here and the exchange and market maker, how do we understand how the flow of money in this instance is related to this setup right here? So you're a retail trader. You want to buy $100 worth of Bitcoin. It goes to Binance, for example. Binance then pings that order to the market maker. The market maker then pings it back to Binance. Binance then charges you a fee to open the trade and gives you the position of $100 worth of Bitcoin. Now, as a retail trader, you're expecting price to go up, and price does go up. So guess what? You are now in $100 worth of profit. Happy days. Binance can see that you're in a trade of $100, and so can the market maker. All right? Now, one thing I always say to you guys is to always pay yourself. Why? Because even though you have $100 worth of profit in the chart and your position is profitable by $100, it doesn't mean it's going to stay profitable. You see, when you go long, the market maker gives you the opposite contract. Why? Because where are you going to get the liquidity from to close it in a profitable position? That's why I say to you, take your money and run and start again. Now, look what happens when you lose $100. Remember, the market maker opens a contract against your position because that's how a market is established. There has to be an equilibrium. So when your position is down $100, the market maker is up $100 on your position. Why? Because when you brought, he sold. So market makers only go short at the highest price, which is why whenever you see price rising to the highs, it's always at that point in the chart where price reverses. Why? Because the retail trader doesn't know how to pay himself. He gets too greedy. He becomes euphoric. He thinks Bitcoin's going to hit the moon. So he leaves his profitable position. He takes screenshots. He shares it off with the mandem. He's being all excited. Like, you know, what's going on, guys? I'm a trader. I'm making money, baby. Until you close that trade, it ain't nothing. I can't stress the importance of that. So, when the market maker can see that your position is down $100, guess what disadvantage you have that the market maker doesn't? You got one or two options. You either cut your trade or you play the game of hopeful trading and you add to your liquidation point. You add to the margin. So you then say to yourself, oh, I can't close this trade right now. I'm too deep in it. It will come back up. It will come back up. And market then keeps on going down and down and down until they get to a point where they just spike it down lower and then your trade is closed out. Mr. Market Maker makes a fat return. He takes your liquidity. Your position is negative. Now you've been liquidated, but then straight away, price reverses back up. It's at these points right here where capitulation is attempted, or should I say starts to come through, where traders start closing big losing positions. And if we actually look at the glass node itself of Bitcoin, you will understand that at capitulation points, that is where price always changes direction. Okay, so check this out. Let me bring up the dashboard, my Traders Reality dashboard, and show you the net profit and losses on Bitcoin. Here we go. The capitulation points in the chart always show where traders close all the losing trades, get their money off the table, and it's always at that point that price reverses. Why? Because that's the point in the chart where the market maker can buy Bitcoin back at the lowest point, because he doesn't go long at the highest point. That's what the retail trader does. That's what the moon boy does. That's what the irrational trader does. Remember, you can only buy when someone sells, and you can only sell when someone buys. Welcome to the hardest, easiest way to make money, ladies and gentlemen, and that is the fact. So looking at Bitcoin, you can see bright as day what the story is right here. We've been talking about Bitcoin trying to do something in this zone. I've been saying to you guys in the streams, something is not right about this move. And the general consensus across the board was Bitcoin to 100K, Bitcoin to this certain price. I don't care about the higher price points. If we can't break above the 60K, why on earth am I looking at a price for Bitcoin nearly 2 times its initial point from where it is right now? We need to understand what was going on in this move. So, before I went to bed last night, based on how I've been seeing price, the fact that we were down a pool of liquidity with New York session closing, you can't tell me New York were kind enough to let us see price drift to the upside without no reversal. What's going on there with New York? We know New York makes us pay. You get 2 reversals in New York sometimes. You get the one where they initiate the stop hunt rise in the Brinks box, and then they make the move to the downside, establish the New York low, and then they reverse off it. In the streams, we've been talking about this key point of the 59 zone. They've been building shorts above key notable areas. Ask yourself the question, why has it made attempts to the high and not succeeded beyond it? Look at all the power of these big green vector candles pushing price back up, yet down to the lows. There's nothing. Nothing's been happening. Look at all the wicks. Where are the wicks appearing? Above 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Market maker favors lower prices, and in order for him to get the best possible fill above key notable areas such as the 59, the 58, and the 57, he marks price up higher because the general consensus is Bitcoin is now going to make a move back up because it has consolidated and formed a base of support. Throughout this development of this pattern, we've been doing the streams, even last night's stream, okay, and the stream before that. I have to show this to you because the information that we use in those streams themselves, okay, puts things into perspective, okay? So check this out. We'll go to the channel and we'll pull up those videos. Here we go. So it starts off like this. Make or break for Bitcoin. All right? And in this one, the rise of Bitcoin is slow. There was the clue. 1,600 Bitcoin may get filled, and that was to the 56, 55K zone. Have a look at that one. Demystifying Bitcoin. We were profiling. Why is Bitcoin boring today? What was the price action saying to us? Bitcoin, fast move, false move. Didn't trust the move to the upside that happened over here. Didn't trust it. Then, Bitcoin building shorts. Now, the reason why I'm doing this video, ladies and gentlemen, is because we've had a few people roll out and say the hybrid system doesn't work. Well, ladies and gentlemen, whether you think it works or not, there is nothing 100% guaranteed in this game of trading, but I will tell you this. There is nothing wrong in having a utility that will improve the chances of a trade playing out, because that utility in the system tells you how the system works. It shows you how the market works. Market maker builds positions above key notable areas, whether it's above price or below the price. If you look at Bitcoin's last move, when it made the move to the upside, which I will show you right now, you will understand the clear explanation. So this move to the upside with Bitcoin, what can you see in this range right here that is more notable than the opposite? So look at the hits to the downside. They favored lower prices. Look, push down here, push, 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 and then push one more time. The vector candles up here, there weren't really many spiky behaviors by the market makers. Okay? They favored higher prices because they just smashed price down to the lows and they were building their longs below key notable areas. Just look at all the red vectors. 1, 2, 3 appearing there. One again. Look at big spiking price down there. Look at that wick. Spike lower. Again, right here and again here. And then we got this move down here. Spike, build the longs at the lowest possible point and flush out all the shorts at the same time. Bring price down. 1, 2, 3, 4, 5, 6, 7 red vector candles. And then they just slowly drift price up and then they shift out of the zone. Over here, it was a different story. We started seeing more hits to the high than we were seeing hits to the low. See, the pushes to the downside weren't as aggressive as the ones to the upside. Why? Because the movement to the upside was implying that they were building shorts because they weren't allowing price to be released to the upside. They were keeping the retail trader committed. Because if they were to push price from this point and continue, the retail trader is going to get in on a good long and he's going to be in profit. Market maker is not about being charitable. He's not in this game to control the way price moves by making money for you guys. He only makes money when you lose money. And this is his business, and his business model pays him, not you. Now, the only way that you can pay yourself is if you understand what he's trying to do to the masses. 95% of traders use technicals to solely base their decision-making processes and try and exploit the market in that basis. But unfortunately, many people dismiss the idea of psychology in the charts. And when I say psychology, I'm not talking about cut your losses, let your profits win. Nah, we ain't about that psychology. That's toilet psychology. That's stuff you think about when you got 5 minutes to yourself. In the psychology game of trading, it's understanding what is the market maker trying to make the retail trader think at particular points in the chart. See, pattern watchers see things differently. When they see price rising, they know something sinister is starting to develop because you can only buy when someone sells. So that's reasoning as to why when price rises and rises, why does it stop? What, because there's a supply? Please, bro. Please, man. Don't tell me there is a supply. Don't tell me that the moon boy became rational and said to himself, you know what, ladies and gentlemen, I think we need to start pulling out our positions because we can't allow price to continue higher. We need to start pulling it back. Come on, man. Come on. Don't let them fool you into the belief that that is the case. True supply and demand, ladies and gentlemen, only applies in retail. All right? You may be familiar with the green jumper story. And I'm going to give you that green jumper story if you are new to the channel because I normally run it through the streams. The green jumper story is like so. A gentleman has a shop and he sells jumpers. He sells 3 particular jumpers. One of them is green, one of them is red, and one of them is blue. Now, he's got 5 of each. He opens his shop for trading, and then he waits for customers to come in. He has his trading day, he closes the shop, and he takes a stock check. He finds that he's got no green jumpers, 3 red jumpers, and 2 blue jumpers left. The concept of supply and demand would dictate that he needs to supply more green jumpers because the demand has overtaken the supply. That is true supply and demand. Yet when it comes to the chart, you're saying to me that when price hits a high, it's because there is a supply up here and traders are not interested in buying Bitcoin at this point. Are you mad? Of course they're interested in buying Bitcoin, because the retail trader is programmed to believe that you buy when prices are rising because you think that you're going to see price continue to rise. Look at the all-time highs. Why is it always at that point in the chart they actually attack the zones and bring it back down aggressively? Because they've committed the most amount of liquidity. They've got the retail trader committed. Look at this move, which is a classic M formation. Price is rising to the upside. The market maker is trapping the retail trader to the belief that Bitcoin is now going to the moon. It moves up, up, and up. Retail traders getting excited. We see this blue vector candle and we say, hold on a second, does that mean volume is starting to rise? Because that is principally what that blue candle means. It means volume or tick volume or the exchange of price at this point is starting to show an interest. All right? But at the same time, could it mean that it's actually reducing? So then what the market maker does, in order to contain the commitment of the retail trader, he makes them buy the dip. He brings price down to a moving average. He then shifts out of the zone. He commits the retail trader who was in a long position, saw a little bit of a drawdown. He makes him buy more at this point in the chart and lets him realize a little bit of a return. He keeps them committed with a spike to the upside, and then he brings price back down. The retail trader has seen how much money he had in his profitable position, but because he's so greedy, he thinks that this is just going to pull back a little bit because that's what happens in price. It likes to pull back. And then the market maker drops price aggressively. Retail trader ain't too concerned about it because he started adding more positions right here. And then before you know it, market maker attacks the zone, breaks the 50, throws off the retail trader. Now the retail trader that had a lot of profit up here is now sat in between break even and a loss. He's in denial. He can't take it. Price comes down and then attacks the whole liquidation points for all the guys who initially went long in this instance. You see, the market maker is going to do this. He builds his shorts at the highest possible point by selling to the retail trader the contract of buy, okay? Because you can only buy when someone sells. When he gets to this highest point in the chart, the retail trader is now coming in and buying and buying and buying. The market maker cannot allow price to go too high up because if he does, he will then be committing to the retail trader and he would have created an influx of interest at this point, and as a market maker he would be obliged to make sure that the balance between buyer and seller is maintained, and he would then have to send price higher. So in other words, the market maker would have to start adding more shorts at higher points. But the problem that we've got is this: if he allows the retail trader to realize a return, the retail trader will start taking a profit, which means the market maker is losing the possibility of actually getting his shorts closed off at the highest point based on everyone's commitment in this area. So the reason why he contains price in this area is because he can't release any more liquidity to the upside, as it will go against his initial objective to mark price higher so he can build his shorts so he can work on the markdown phase. Now, inside all of this move to the upside, there are liquidation zones, okay? Now, liquidation zones are, of course, the amount of margin that a trader puts up to put up his position and use the leverage. These are liquidation points that the market maker can attack and open trades on the opposite direction for free. Because when you get a liquidation point hit, it's deemed as an order. All right? So when the market maker drops price to the downside, all right, he's releasing his shorts and he's building longs at the same time. Because when you close a liquidation point, or when a liquidation point gets closed off, all right, your buy order gets sold. The market maker buys that using the liquidity that is released from the liquidation. Remember, you can only buy if someone sells. He gets his profit from your negative position. If you are new to the channel, ladies and gentlemen, be sure to like and subscribe so you can tune in to the daily streams where we talk about this sort of behavior every single day regarding the market makers. Now, where can we expect Bitcoin to go next? quite frankly, ladies and gentlemen, there is a little tool that we like to use, which some of you may or may not be familiar with, and that would be the Bookmap. As it stands right now, I'm just getting that ready to load up. Whilst we're waiting for that, make sure you go over to the Traders Reality website, tradersreality.com. The link is in the description. And you'll be able to take advantage of downloading all these indicators free of charge. Okay, there's a start here option where you can check that out. But more importantly, ladies and gentlemen, we are currently doing a giveaway where we actually are giving 7 TradingView licenses. Okay, and I'm going to be doing that later on today because the Black Friday event is slowly counting down. We got 20 hours until that expires. And what I'm doing is I'm giving 3 premium plans to the patrons of the channel, and then I'm giving 4 premium plans to the whole YouTube channel across the board. All right, 2 of those licenses are being supplied for by TradingView themselves. They said it's a great idea, mad love and respect. We'll throw in a couple of licenses for you. So in order for you to take part in that, ladies and gentlemen, all you need to do is come to this video in the channel, watch it, and follow the instructions. Okay, it's not a long video. Follow the instructions on there, and you'll be then taking part in the actual giveaway, which I'll be releasing later on tonight. So make sure you get involved in that, guys. It's a nice $600-700 worth of TradingView, free for 13 months. Okay, courtesy of Traders Reality and TradingView. All right, cool. Let's quickly have a look at the Bookmap and determine what we are likely to expect Bitcoin to do next. Okay, so the Bookmap itself includes all the limit orders in Bitcoin across Bitstamp, Binance, FTX, GDAX, and Kraken. Okay, now the sweet thing about this is this. In the streams, on those last videos that we were talking about in the channel, we've been referring to these points. Okay, now if I bring up another image for you, it will put things into perspective. Check this out. In one of the streams, we actually discussed the 55k zone and understanding how on the chances of Bitcoin coming back down to those points. All right, so here is the first image. So there it is right there. Now, if you look right here, there was 563 Bitcoin, 348, 293, 341. Now, this image is taken from the video in the channel that discusses Bitcoin, 1600 Bitcoin may get filled. Reason being is because we came to the chart of this Bookmap and we understood that something was going on. There was no liquidity in that above point in the chart. Look, this is the Bookmap from that live. Nothing happening up here. Okay, there was not much happening, which was giving me the reason to believe that they were getting ready to drop price. All right, the orders were coming into the downside. The Bookmap itself was showing an imbalance favoring limit buys, and it was just a case of price getting into that direction. Now they threw everybody off and marked up price to the upside and changed all these limit buys and moved them up higher. Got everyone committed, and then bang, they shifted price down the zone and they hit all these pools of liquidity at the same time, because all those 55k zone points down here, they are still present and static. If you notice, we were waiting for the 55k zone to get filled. They filled the 55k. Look at it, it's disappeared. All right, now they've moved it down to the 53, and we're looking even lower to see where the liquidity is at, and we can see bright as day that Bitcoin has got not so many orders at 50k, but it's all going to be down to what they do at 53. Bitcoin hits 53, we are going to know the true basis as to whether or not Bitcoin is going to continue lower and potentially break down the 49,800 zone. Now, with that being said, guys, nothing up here was happening just before Bitcoin dropped, and nothing down here is happening whilst Bitcoin is in its current range. So let's assume that this is the point where interest is going to step in for Bitcoin to then try and make a return back up to the upside. You can see the Bookmap is imbalanced by 30% to the limit buys. Volume is coming into the chart. Are we going to see Bitcoin drop even further? Yeah, looking at the RSI and the actual TDI itself, this is one of the indicators you can download for free. Outside the volatility band, we are expecting them to try and bring price back up. Now, they can bring price back up and recover the retrace of the move of the vector candle, but at that point, we will then need to understand if they are going to use this weekend to do the following: drop, up, down, forming another pattern. Yeah? ladies and gentlemen, believe me, once you start understanding how they move price, you'll see this happening again and again and again. It's no surprise. They were building the shorts. They brought it back up again and no follow through. Wicks to the high. 1, 2, 3. Reverse. Mad love and respect to you guys, and I will catch up with you later on today. Peace.